Welcome to the Clergy Tax Training. For those of you that are going to be brand new pastors in the Dakotas Conference of the UMC, this is for you. I'm hoping to look at those challenges that you're going to face as a licensed or ordained pastor and hopefully help you out. My name's Jeff Pospisil, by the way. I'm the conference treasurer. And the quote that goes with this section is from Will Rogers. It says, "The income tax has made more liars out of American people than golf has." And it's mainly because it's so doggone complicated and the IRS is kind of vague. And so that's going to at least set the tone for this training session. So our goals for this session are: one is to increase your awareness of the tax challenges facing clergy, which are considerable. Two, learn some practical tax tips and strategies to help you follow through. And the reason why we want to do this is so that you have more money in your own pocket. I'm a firm believer that, a person that has their heart right with God and money in their pocket will find a way to use that money for good. And then the other one is spend an appropriate amount of time and energy worrying about tax issues. So what happens sometimes is when you don't spend the time up front, it almost builds up like compounding interest. And then you have a heap of worry, time, energy that is going to be focused on tax issues, probably right around Easter season if you don't get ahead of this. So this training has 3 sections, and the first one is the confusing nature of clergy taxes. Albert Einstein said the hardest thing in the world to understand is the income tax. Back then it was probably a little bit easier when Albert was around. One of the things that also makes this a challenge is that you might look to a CPA. I'm a CPA, I'm inactive currently, but you would look to somebody that's a trained accountant and you'd think that you can ask them questions, but most CPAs do not study clergy taxes. They only have a vague idea of the challenges that a pastor might face. So that's also why it's difficult, is it's confusing and the experts are few and far between. I'm going to go ahead and start this off with a few questions for you. And the first one is, are pastors employees of the church or are they self-employed? So go ahead and give your answer, and the answer is yes. They're both, actually. So the IRS thinks you are an employee of the church, and so you're going to get a W-2. The Social Security Administration says, guess what? You are self-employed, and you're going to have to file a Schedule SE, which is the self-employment one. And that's just the way it is. So your W-2 that you get from the church, it won't have any withholdings for Social Security and Medicare. Or it shouldn't. If you are a licensed pastor or you're on the track to being ordained, you should not have any of that withheld, because how it works when you're a lay employee is you pay 7.65% for Social Security and Medicare, and then your employer pays the matching amount, 7.65%. So you, as a pastor, you're going to pay the full, both sides, which is 15.3%. So of your compensation, 15.3% is already going to go away for self-employment taxes. And just here is another one. If you live in your own home, and let's say you set up your own office, and you might say, I wonder if this qualifies for a home office. Well, because you're an IRS employee, chances are it will not. If you have a side business that you use that home office exclusively as an office, then yes, that would probably count. But if you don't have that side hustle, then it's most likely not going to count as a home office because you're an employee. Next question is, how can pastors make their tax payments? Do they have their taxes withheld through their paycheck, or do they make quarterly payments? And the answer is yes. What you're going to see is that most pastors will actually make quarterly estimated payments, although it is possible to have it withheld, and I prefer that way. It's just easier. Instead of putting that money aside into a savings account and later remitting it to the IRS once a quarter, it's just easier for most people to, if your church already has lay employees, it's no extra work for them to just withhold yours. So you just have to let them know. It's through a form W-4 that you let them know how much how much income tax to withhold. And you can withhold enough to also cover that self-employment taxes. So later on, I'll give you a snapshot of my clergy tax estimator. But the old rule of thumb used to be that you would put 30% of what your take-home pay is aside for taxes. And in 2017 or 2018, I can't remember when the tax laws changed, that's changed. So now if you're a married pastor with a couple of kids, it might be 20% or something like that. So it's good to either use, I have my clergy tax estimator, or to talk to a clergy tax expert. Either one of those would be a good route to go. One of the other things is, some of you will be getting a conference move, or the church will be moving you, and you should be putting aside roughly 25 to 30% of the value of that move. So if, let's just say your church, I'm just going to use a round number. Let's just say your church does really cheap, and they are able to move you for $1,000. It's just a U-Haul type of move. You should be putting aside an extra $300 to cover that tax bill, because you will get a 1099 for that. So yeah, and by the way, I have this note down here that says, churches can withhold income tax, but they can't withhold Social Security and Medicare. So although you can withhold enough for it, it won't show up on those lines for Social Security and Medicare. It'll all show up in that federal income tax withholding one, which I think is box 2. The next question is, can pastors really opt out of Social Security? And the answer to that is yes, kind of. They can opt out if they're morally opposed to public insurance programs. So not just a crappy investment, but it has to hit you morally. And there's a lot of good reasons not to opt out, by the way. A lot of your benefits within the United Methodist denomination are factoring in that you are enrolled in Social Security and Medicare. So we're talking about disability, we're talking about retirement income, those kind of things, retiree health coverage. So those are things that you really have to, if you are morally opposed, you need to be able to cover yourself for disability, retirement, and your retiree health. Those are the things that you need to be very well disciplined on. Our next one is housing taxable or not. So the value of living in a parsonage, or if you receive a cash housing allowance, is it taxable or not? And no surprise here, the answer is yes. I kind of got a theme going on here. The value of a parsonage is not taxable for income tax purposes. The amount of cash housing allowance that you have spent on housing related expenses is not taxable for income tax purposes, but both of them are taxable for self-employment purposes. So both of them are subject to that 15.3% tax. And the tough one is always, so how do I value the parsonage? And it's supposed to be the fair rental value, and it's very subjective. I mean, you can talk to a realtor, you can look for what similar properties are being rented out. A lot of times it's going to be tough. The best way I found, and I heard this just the other day from a clergy tax expert, Connie Buckles. She said that you can use the Zillow values, and you can use 12% of that Zillow value, and that will get you in the ballpark. And I tested it, and you might not have a Zillow value for your specific parsonage, but I bet you can find a similar house in your neighborhood and multiply it by 12%, and that will get you in the ballpark. The next thing we're going to look at is your clergy compensation form. So every pastor that's serving a United Methodist Church should have a clergy comp form, and it's a great thing for spelling out your compensation package. And also, we designed it in such a way as to help your treasurer pay you accurately and also complete your W-2 accurately. So that's a big thing. But there's going to be a number of decisions in there that you will hopefully understand after this that could save you thousands. And that goes with this quote by Arthur Godfrey. "I'm proud to be paying taxes in the United States. The only thing is, I could be just as proud for half the money." We're going to start by looking at the designated housing exclusion, and that's right here in section 1, line D. That should almost never be 0. If you're living in a parsonage, I put something in there because this covers any unreimbursed housing related expenses, and I'll go over what housing related expenses are later. But so any unreimbursed expenses you have for the parsonage, you can write off for income tax purposes up to the amount that you put in the designated housing exclusion. So that is the cap. So you almost always want that to be pretty high to cover anything, especially a lot of times if you're moving to a new place, you might have some extra furniture expenses. So again, furniture counts, but only up to that limit. So you want to set it high enough. If you have a cash housing allowance, you're going to want to look at how much do I estimate my total actual expenses are going to be, and again, round up generously. And then if that cash housing allowance doesn't cover all of that estimate, that difference is what you're going to set as your designated housing exclusion. Because all this does is it designates a part of that base salary for housing for tax purposes. It's just a legal loophole given to clergy. So again, if you have $20,000 cash housing allowance, but you estimate your housing expenses might be as high as $25,000, you want to designate an additional $5,000 then for your designated housing exclusion. And just lastly, this is something that you can't declare retroactively. So let's just say, for example, that you forget to do it. You know, that you put 0 here and we didn't catch it until October. Guess what? All the time that you were living in the parsonage from July, this is talking about new clergy that start in July, from July till September, you're not going to be able to write off any of those expenses, but you can write off stuff beginning in October. And again, this is an annual amount as well, so we're going to prorate it. So if we put, let's just say we put $10,000 in here, only $5,000 worth of expenses then are going to count for that first half year. So if you are serving July through December in your new appointment, that's the amount that counts for that year. So hopefully that makes sense. Next, we're going to look at health insurance related salary reduction. So if you are on the conference health plan, this applies to you. So likely, well, you have to make these elections through the open enrollment process. So when you go to enroll, this is when you'd make those elections on all these things, the HealthFlex Pastor Share, the medical reimbursement account, and the dependent care account. So the HealthFlex Pastor Share, that is your portion of the premium, but it also includes, if you are on a health savings account plan, an HSA plan, it includes your personal contribution into that HSA plan. So just to let you know, that's where that shows up. If you're not on an HSA plan, a lot of times it's a really good idea to use this medical reimbursement account. That's just a flexible spending account. So it'll cover your vision, dental, all that stuff, plus other out-of-pocket medical expenses. Then there's dependent care. So again, if you have child care expenses or something similar to that, you can include something there as well. There are maximums and minimums, and I don't remember what they are. Leanna knows that kind of stuff. But this saves for both self-employment and income tax purposes. So again, if you put aside, let's just say $500 for medical reimbursement and $500 for dependent care, that might lower your tax bill by $300. So that's not chump change. There are some use it or lose it features to this. I know they do allow you to carry over some, but so again, this is something you talk to Leanna, so you don't really want to overestimate this one so much. You want to be fairly certain of what medical or dependent care expenses you're going to have. The next one is salary reductions relating to your UMPIP contributions. So this is your personal contributions into your retirement account. UMPIP stands for United Methodist Personal Investment Plan. And you're going to have 3 options: before tax, after tax, and Roth. But actually the most important option is putting money aside for retirement, period. That's the most important thing. Put that money aside, let it grow until you retire. That's the best thing, because this is going to subsidize your retirement through the pension as well as through Social Security. If you asked me which one should I choose, I would say probably before tax, because you're going to lower your tax bill now. And because your retirement income from the United Methodists anyway is also still subject to the housing exclusion, you're going to be able to write off housing related expenses against any income you get from your retirement account. And so you might be able to avoid paying taxes not only today but also in retirement. So that's just something to think about. One question I sometimes get is, can I have my tithe withheld from my paycheck? And the answer is yes, but it will be after tax. So it won't decrease your tax bill, but yeah, you can have your tithe withheld from your paycheck if that's what you want to do. Now we're going to shift gears a little bit, and we are going to talk about the more practical stuff, because I covered a lot of information, but it's of no use to you if you cannot apply it. So hopefully you're going to be able to see how you can win at Clergy Taxes. The first thing you can do that will really help is to get your treasurer on board. They can only pay you correctly, do your taxes correctly, if they have the information. And one of the things that I see a lot of times is that a treasurer won't have the clergy comp form. You know, we mail it to them. Sometimes it gets lost. Sometimes it doesn't make it to their box. We usually email you a copy of your own clergy comp form. So if you get it, go ahead and print out a copy, give it right to your treasurer. That'll show them how to pay you. We normally do send with that mailing also a link to some of our resources on how to pay your treasurer correctly, but those are also found online on our website, so www.dakotasumc.org, and there's a spreadsheet that'll calculate the paycheck for you, or it'll calculate how to fill out your W-2 form. Those kind of good things are right there in the resources there. And lastly, I'm going to plug my blog site, jctaccounting.com, and I post a number of these questions. So I'll get questions from people, and then I'll end up turning it into a blog post. So there's a couple years worth of articles there, and there's usually a related video as well. The next thing you need to think about is you need a system that works for you. You know, and I really don't care what you use as long as it works for you. You need to put aside tax-related documents. If it's going to be in a folder, that's great. If you're going to put it in Dropbox or Google, you know, just upload them, that's great. If you got a spreadsheet to track them all, that's great. You know, but you need some way of being organized that works for you. So even if you end up with a shoebox full of stuff, at least you have the documentation, because the worst thing you can do is not have the documentation, and then you're for sure going to overpay your taxes or get in trouble with the IRS. And here's what I normally do is that I'll have a folder for taxes, and then I'll separate it out by year. So I'll have a 2022 year, and then I'd have a folder within that, or a section within that, for housing expenses, one for your funerals, weddings, those kinds of things that they go on a Schedule C. And so any income as well as any related expenses with funerals and weddings, if somebody pays you to speak or something else, not your church but some other organization, that kind of thing goes right there. Tax documents and taxes paid. So when you receive your W-2, if you receive 1099s, any of those kind of documents, those should go right here. I would also, by the way, include a place for your clergy comp form, which might be in there as well. And if you make quarterly estimated payments, I would keep record of that also in that folder. Any unreimbursed expenses. So those unreimbursed expenses, then business expenses is what we're thinking about. The housing expenses, by the way, are also unreimbursed ones. But unreimbursed business expenses can go there because you can write them off for self-employment purposes. And then you're going to have something in your miscellaneous. So stuff that you get that you don't know if you need it or not, put it in the miscellaneous folder. It just doesn't hurt. Again, the worst thing you can have is not having the documentation. So if you have more than enough documentation, they're just going to say, we don't need this. The question I always get is, what housing expenses should I be keeping track of? And the IRS, they never give you a definitive list of what expenses count. I think that's part of their thing. They like to keep you on edge. But this is a list that I've compiled from various tax experts, clergy tax experts, and it seems to be trustworthy. So I'm just going to go through the list real quick. So if you own your own home or you're buying your own home, your down payment, again, there's a timing thing with the housing exclusion, so that's going to affect when you make that down payment. Your mortgage payments, your real estate taxes, so both these things, if you itemize, you could also write them off again. So they could be withheld, they could reduce your taxable income, and then you could also use it for your itemized taxes as well. Your property insurance, rent payments, utilities. There's a couple of things to be aware of. It's local telephone charges, so not long distance, and you don't see cable on here either. But you do see internet access. Homeowners association dues, renters insurance, so you should have renters insurance if you're living in a parsonage. Furnishings and appliances, so you buy a bed, table, chairs, anything like that, you can write that off. Decorations, so curtains, blinds, wall hangings, all that can be written off. Structural repairs and remodeling, so this is mainly if you live in your own home. Yard maintenance and improvements, and any maintenance items, so Windex, pest control, light bulbs, pine sol, that kind of thing. Any of these things that are unreimbursed by the church, you should be keeping track of those and keep a folder for them. One other thing, this is a digression from my digression, by the way, as I mentioned that how much do you include for income for housing if you live in a parsonage? So here's just a screenshot of Zillow that I did today, and for the Flandre Church, and I tried to pick I can't remember if I picked the parsonage or if I picked one a house that looks similar to it, but it'll give you an estimate. You can see that estimate right here, $83,300, and you can use that then if you want for estimating what the fair rental value is. And again, multiply this by 12% and you're going to get something in the neighborhood of $10,000. And so that would be a good place to at least start. All right, we have a couple of miscellaneous things that I want to throw out, and these are more recent changes, both of them under President Trump. So the first one is moving expenses, and if you've been around a while, you might remember when moving expenses were deductible and you could write off your mileage and any other expenses. Well, that's no longer deductible, and if your employer pays you for it, it's taxable. So if they pay for the move itself or if they reimburse you, it's taxable. So if your church happens to pay to move you, then it should go on your W-2. If the conference pays to move you, you'll get a 1099 for that. And again, put aside about 30% of that amount of whatever the cost of the move was. And you can call up Joanne from my office if you were moved by the conference. The second one is educational assistance. And this is a really good deal, is that your employer can help you pay down your student loans. So if you have any student loans, your employer can help you pay those down with tax-free money. And it's called a Section 127 plan, so the church needs to adopt it. I have a template online, and you can do that. The other nice thing is, through Diane Owen of my office, there's up to $25,000 in grants available for an individual. I think it's over 5 years. It's called Investing in Leaders Grants. So, and she will coordinate it with you. So your church adopts that Section 127 plan. She cuts a check of $5,000 to the church. Your church goes ahead and pays your student loan down. So that's how that works. So you don't have to be taxed on that $5,000, because otherwise that $5,000 is going to cost you at least $1,000 in taxes. So really good deal. The next one is you need to get on top. If you're not going to have your taxes withheld, then you need to get on top of these estimated tax payments, these quarterly estimated tax payments. So here's the due date. These are the regular due dates. So September 15th, January, April 15th, June 15th. By the way, this one can be a killer for you because you are going to pay your first quarter tax payment, so estimated payment, plus if you underpaid your taxes, that final tax payment is due also April 15th. So you might be hit twice if you didn't plan well. So that's also why, again, I don't mind churches withholding them. Either way, if you're going to do the estimated payment, there's a way to pay it directly online, or you can use the coupons. I think you can still use the coupons. Form 1040-ES for estimated payments. So I do have a clergy tax estimator spreadsheet. I should probably use a qualifier that this is not tax advice or anything like that, but it kind of is. But it'll give you an idea. You punch in your clergy comp form data, and there's some more data that it asks for you, and then it'll give you an idea of where you are going to land for your total tax bill. And so if you're doing quarterly payments, divide that by 4. If you're having it taken from your paycheck, divide it by, usually people are paid twice a month, so divide it by 24, and that'll get you where you need to go. And here is my final slide for this, almost the final slide. The final informational slide is that you need to get a tax professional, a clergy tax professional at that. These are 5 people that I trust. One of them that used to be on here for years and years was Marilyn Perry, but she's finally retired. But it's so important to start out right, and it's worth the money, at least the first time. Even if you've done your taxes forever by yourself, it's worth going to a clergy tax professional just so you can see what it looks like to be done correctly. So there's a lot of ways to make a mistake around it. Like you've already heard, clergy taxes are different from anything you've ever done. So at least get it done correctly once, and then you can decide if you want to keep going to them or if you think you can handle it on your own. But I think it's money well spent to go to one of the clergy tax experts. These ones I know speak United Methodist Clergy Taxes. There might be other ones out there, and I appreciate it if you do send me a name of somebody that you trust that works with other United Methodist clergy. It helps to build this list. All right, I know I probably didn't answer all your questions, but if you have any clergy tax related questions, be sure to shoot them over to me, and I'll do the best I can to help you. All right, God bless.